What's happening, guys? Another Monday night scan for Tuesday, July 6th. This time we did not have the market today, which is Monday, and we had a nice long weekend, and hopefully you guys enjoyed yourself with the day off for Independence Day. We've got a lot to talk about. I'm going to try to cram it all in, and first and foremost, as you guys know, if you leave a like and you leave a comment, your key takeaway with the timestamp, you are automatically entered for a free t-shirt. Next week, we're doing the Icon meals. Anybody that uses IU free ship gets free shipping. That's probably the most expensive part out of it. And the week after that, we're going to be giving away a scan. So again, all you got to do is leave a comment, your biggest key takeaway, leave a like, and you're automatically entered for any of those things. First, last week, the swings were just insane. We had MRIN, and you guys know that I was positioned pretty heavily, 270s, 280s, 320s, 330s. And, unfortunately, yeah, I made it to about 687 for like the max, and yeah, I went to 18s and yeah, or actually 20, whatever on Friday, but it is what it is. And, I had tweeted last week, you're never going to sell the top. And, the more times that you try to get the entire move, the more times that you're going to be disappointed, right? A lot of times after a huge move like that, we always want to hold the next trade because we want it to be just like this one we just missed. And you have to remember these black swan events are so rare. Let's just say it's 1 out of 999 or 1 out of 99, probably towards 1 out of 999. And it's not going to happen very often. And if you are always holding out and hoping for that potential black swan event, you're going to be disappointed and probably give back more often than you win by doing that strategy. So the fact that I sold early, that's okay. And I would have been more upset about giving back a ton of profit than the profit that I missed out on. And, there's just been so many times where I'm sizing, everything's perfect, and then there's just that kill candle, right? And it pulls back $1, and you shoulda, coulda, woulda, you could have got out, you could have had this huge gain, and instead you wanted more. So, it is what it is. And we still got a good piece of the next week's action. As you guys saw, I went long quite a few other times on MRIN, including Friday on that week open and the breakout from 17 all the way up to 22, 23s or whatever that was that it hit. So AUUD was another one, nice doubler and almost triple from a swing standpoint. Dare with the catalyst that we talked about on last week's scan went nuts last week, ramped up over 2. MOXC, you guys know that I've been there for quite some time. I've been day trading it as well as swing trading it. So when it had really gone up, crazy that one day where it kind of went into a circuit and swiped up towards the 24s and above, I had taken out all the day trades and just kept that core. When it started to consolidate around 18, I started to scale into the position, and we've had a nice couple of days kind of solidly bidding up. So I'm being patient, trying to let that trade work in case it wants to do something like 30 or 40s or some type of outlier move. You have to assume that it's not going to, right? Because if we're betting on that outlier event, we're betting on that black swan event, whatever the case may be, more often than not, we're going to be let down. So another one, VTNR, went nuts as well after hours. So as you saw, if you paid any attention last week, there was a crazy amount of swing trades, all discussed ahead of time. It's not just making this stuff up like, oh, this would have been a nice swing trade. We talked about it. I was long, and it just happened that they all worked out. So hopefully they continue to work out at that capacity. There's times to swing, there's times not, and we kind of hit upon that each and every Sunday scan where. Sometimes I've been talking about how I've just been kind of going sideways with particular swings and not really doing anything. And then all of a sudden, all at once, they go nuts. And that was kind of like the last couple of weeks from the swing ideas. So hopefully they continue and, we'll see what happens. But Vegas. Las Vegas is happening for Traders for a Cause. I will have information very, very soon. just to give you the dates that we're doing is October 15th to the 17th. We had a lot of interest. Everybody is ready to get out and get going. So based on the results that we got from some surveys that we did, as well as the event that we did last month or the month before, everybody's been ready to go. So that's happening. And again, if you just go to tradersforacause.org, you can sign up on the newsletter. But either way, I will be talking about it in Sunday scans. We'll go from there. And then last non-trading, actually it is related to trading, but I'm going to get into some trading discussions. But I wanted to mention again, usually once a month I mention it, but Avidity Fitness, if I can inspire anybody to get motivated and become part of the 4 classes that we do a week, we have a bunch of different traders, and it's a lot of fun. It's a good group, and sometimes you just need that kick in the butt to get going. For me, I just as well, I do something else, and I have to be accountable. I have to show up. And just by knowing that Saturday morning at 9:10 and Sunday morning at 9:10, Tuesday and Thursday at 6 p.m., I've got to show up. And it's something that keeps me going. Zach keeps me accountable. So if you guys are interested, he always gives out a bunch of free sessions. So just DM Zach or reach out to me and I can connect you guys. But I'd love to inspire a few of you guys to join. Every time I mention it, we get a handful of people, but I'd really like to see, a dozen or so more in the classes, just because it's really good for not only health, but also it trickles down to trading. You eat right, you train right, and then you trade right. So think about it, and if you guys want to give it a shot, and if you're nervous and you don't want your camera on Zoom, just shut it off. It doesn't matter. Just try it, and all you got to do is show up. Once you're there, it's almost already over. So, all right, firing on all cylinders was my first point here. So, I talked about AMC a lot, right? Anytime that I have a struggle in the market, I try to talk about it on these videos or at the beginning of my scan, right? So, that's what I use my nightly scans for, is to kind of give you an idea of what I'm thinking in the current market, any struggles that I'm going through, anything that I'm doing really, really well. What's working right now? What's not? And then, on these Sunday videos, I try to, if and when I ever hit a hurdle, discuss it. So as you guys know, I talked about AMC, and before that I talked about maybe Kodak and a few others, throughout the way. Every now and then I have, a period of like, shouldn't have done that. And, it's always about that next mentality that we talk about. And so I went through it and I discussed how and what changes I was going to make. And just by doing that gets you in that right mindset. Sometimes you just have to verbalize what you're looking to do to get there. And as I tell everybody in the room, between these Sunday video scans as well as the broadcast in the morning, every morning at 8:50 a.m. I do a broadcast, and it forces me to condense my watch list from 12, 15 different names to 2 main watches and then a couple secondary watches. And right there, it makes you zone in, focus, and stops all this back and forth of, well, I could trade that, I could trade that, maybe I'll do that one, maybe I'll do that, maybe I'll do that. That one's moving. And that's what a lot of people do. They see stuff moving, they want to be part of it. Or they think that the highest percentage mover is something they need to trade. But sometimes you just let that one go. Let that one go, because everybody's going to be watching it. But because they're watching that one, this one, this one, this one, this one are all so much easier without all the headaches and the emotional attachment that most people have. Because what happens is the crazy ones, the ones that are going nuts, the ones that everybody is focused on, everybody's doing the same thing. So when you are wrong, that move is so much more of a knee-jerk reaction that you've got to be on your A game. And if you're not, that's when you start to have those situations. So, MRIN and BLIN and all these different names that everybody wants to have a piece of, it's fine to trade. But don't try to figure it out, right? Because everybody's doing the same thing. And when they start to squeeze, everybody's short and everybody is waiting for that same pullback. So if you're not covering into that pullback, you've missed your opportunity, because these stocks that squeeze can pull back a certain amount, right? Without letting shorts out. If they pull back just enough, shorts will add and continue to add to their position and get bent along the way. If they pull back too much, that's when we start to get the failed follow through. That's when I start to get interested. But if they're staying in trend, stocks are meant to, trend up and down, up and down, up and down. And there is a point where shorts never get let out, no matter how much they dip along the trend, as long as they're holding that trend. And that we've seen a lot of that on MRIN and Blinn and all these different names. Even AUD right now is really setting up to a point where it might actually squeeze out. So we'll see what happens with that. But the point here is, you saw my struggles with AMC for a week, and I told you what I was going to do to focus on what I'm doing when I do the best trading, and I went right back to it and firing on all cylinders for the last couple of weeks. And so anyway, understanding when a trade has played out is another big thing. So this week, or the past 2 weeks probably, we've had a lot of great trade opportunities. We've had stocks that recent kind of trash IPOs that normally wouldn't do anything at all have been running. ZME, ISPC, UPC, TRKA, all these different names, right? So the interest was trash IPOs. Everybody was kind of going after them. Then all of a sudden, they all started to unwind. You have to identify that. You have to understand that maybe that trade idea, that concept, that theme in the market has played out. And that's why you saw me on ZME started to go nuts. And I'm like, hey, don't think black swans here. Don't think that it's going to go to 70 on circuit halts. You got to go ahead and lock in, because there's a lot of retail people on this thing, a lot of people on the same side. And once that theme, trash IPOs going nuts, plays out, it's going to unwind. And sure enough, it did. And you saw the same thing. We got the idea from ISPC and TRKA, all these names that were running that stopped going up. Times to trade for me. I think this was an important one. And I think one of the most important parts is understanding when you have an edge and when you don't. And one of the biggest changes that I've made is usually I focus pre-7 a.m. I'm there and I just kind of get a feel for A, what's running, and B, what I'm potentially interested in. And then what I do is I think about, okay, what's the borrow situation? Do I need to locate, or am I good? And a lot of times I will borrow a lot of things that I might not even trade, just because I know that once everybody wants to borrow it, the supply and demand, the price that I'm going to have to pay probably ends up going up. And there's a good chance that I might not be able to get any. And so, with the early wake up, you kind of get a feel for what's going on, but I don't really like to trade until I see the action after 7 a.m. into potentially 8 a.m. And a lot of times what I see is 7 a.m. to 8 a.m. be a pretty nice opportunity. But if they consolidate, if they bring it under VWAP, reclaim it, 8 a.m. plus, I find that most of the headaches come from taking a trade from 7 to 8 a.m. and then trying to turn it into a full day trade. 8 to 9 a.m., it creates a big headache. Then you end up staying into open, and you end up missing all the layup trades, right? So one of the questions that somebody had sent in was, what are the times to trade, and what am I most interested in? And for me, it's really 7 to 8 a.m., kind of reset, figure out what I'm going to trade for the day, and then think about off open. And for me, if I'm going to trade off open, it needs to be coming into my wheelhouse. I need to be prepared for it. I need to have it reacting in the manner that I thought it was going to. Otherwise, I just wait, because there's no rush to be in a trade. You got to wait for it to come to you. So many people see stuff moving and they want to be part of it, and they chase it and they go for it. And so a situation like this, we just wait and wait and wait and wait. So anyway, times to trade for me is 7 to 8 a.m. and then 9:30, 9:32, 9:35, around there. And then maybe something, later on, 9:45, 10 a.m. plus. Otherwise, wait for the trade to come to you, wait for the setup. And so for after that for me anyway, most of my gains, most of the trades that I make, is the majority of my money is in the first half of the day. So after that, it's got to be A plus, right? Because what happens if you go back for more, right? What are you going to do? Make 10% more? Or are you going to lose 20, 30, 50% of your day, right? So there was a question that came in about overconfidence and overtrading and all that kind of stuff. And it's true. A lot of people just go for the next trade just because, they want more, 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 more. But how often you go back and you're making, decisions based on how much you're up, and then you end up giving back? Was it worth it? So you should explore that and figure out whether or not, it's worth it for you to go back later on in the day. And for me, it's got to be a great setup. Otherwise, I'm just trading to trade, and what am I doing? I'm going for another 10% more? Who cares? Your time's more valuable than that. All right. So we have a couple other things to go over. XELA, perfect ATM setup. And perfect setup, gap up, huge move after hours, huge gap pre-market, filed an ATM pre-market, and it was just an A plus setup, and it really set the tone for the week ahead. So we had a great opportunity with that trade, got the meat of the move, and then got out of the trade, and then rescaled into the trade after open, after they shoved it into VWAP, which was the goal of the trade. Meds, super familiar. I actually got long pre-market because that's the idea of staying familiar with particular trades. If you stay familiar with trades, when there's a news that hits, when a PR comes out, you immediately know, okay, my risk is 10 cents, 20 cents for the potential of what? $1, $2, $3 of upside? Because anybody that's been trading for over 2 weeks should remember meds and what it did a couple weeks ago, right? So that was a no-brainer long for me. That was a great opportunity. And then, as you guys saw, I got short, nice failed follow through momentum, and moved in, moved on. Move in, move out, move on. Neo, another nice trade from last week. That was a great trade from Scan. Goal was 55 parabolic, and ideally it has some type of exhaustion move and unwinds. We got that. SPCE, the range, the opportunities have been endless lately, and I think we're going to still have another nice day or two on that one too. Blinn and Wish, you guys know I've been talking about, and I just feel like that trade has traded out. I don't think it's going to be one of the rest. I don't think it's going to be one of the ones that kind of gets away. And I think that it's super retail crowded. I think a lot of people are on the wrong side of the trade. And sure enough, we've got that nice unwind, and it was a really nice, clean opportunity on the short side after that 15 reject that basically confirmed the entire thesis that we've been talking about. And last but not least, Blinn on Friday, really nice opportunity. And this is a great example too. I posted on Twitter because somebody had mentioned it, but Brandon had had this thesis and this thought that maybe this is one that gets away. He had been watching it. He had been focused on the action, and it's just like people are better at news than me. People are better at biotechs than me, and you surround yourself with people that are better than you at certain things, right? Same way, you surround yourself with people with different maybe views, right? So Blinn, maybe I'm looking for a short. And then he mentions that, and I know that he had been kind of zoned into the trade. So it makes me start thinking, and all right, what did he see? All right, I'm going to keep that in my mind when I'm thinking about the short. And sure enough, as it flushed out, and it held those key levels that I posted in the room, I was covering. And I wasn't trying to be a hero and try to step in front of it because, what did he see? And you know what, maybe he's right. And sure enough, it continued to go, continued to hold, and my covers made me look like a hero because I wasn't trying to be a hero and try to and try to step in front of it. And because of that, the hero move was the cover and not trying to find the top. So that's what I've got prepared for my thoughts. A couple questions that came in. How do you balance minimizing risk through scaling out and letting your winners run so you can optimally capture the meat of the move? So for me, the way that I kind of do it is I scale in. I'm always a starter just to kind of be there And sometimes those first entries I'll let go against me. That's fine because it's a starter position. So the key is really, when if you do trade that way, make sure it's a starter. Don't just say it's a starter. Don't just say it's oh, I'm just going to start in here and that's that. Most people are a half of their position or full size or something, and they're like, yeah, I'm just starting. No, you're not. Make sure it's actually starter, 10, 20% max of your position. Otherwise, just avoid it. Wait for the information to come. Wait for those levels to show, and then find those trends to join and things like that. But for me, I start out smaller than you think, and then I scale into that winner. If I think that a trade is going to flush, I will scale into that. If it flushes, I will cover into that around that core trade, around what I originally started with a couple ads. Then I scale into it, flushes out, scale out. Maybe it sets up again, scale into it, flushes out, and then cover a little bit. That way it allows me to really increase my risk or increase my size without the risk. And or at least with the house's money kind of risk, right? So you're scaling into something that's already working. You're scaling out, going back to your normal risk, taking advantage of maybe those technical breakdowns or breakout spots, as the trade progresses. And then going back to your typical size that will allow you to let the trade work. Because look, if you're too sized in, if you have too much, as you know, you're going to get, kind of worked out of the trade. What inning do you think we are in now? Everybody thought I was crazy earlier when I said we're in the third inning. I mean, what are we in? Maybe the fourth, bottom of the fourth, top of the fifth? I still think we have, originally when I first started saying, quoting the market in baseball terms and innings, I said I still think we have a good year or two left. And so we're only a couple months into that. And I do think that nothing's going anywhere. Keep in mind, all of this upside, we will continue to have range on the downside if and when we ever pull back, and, I don't care if we do or not because there's plenty out there. So, I stopped counting innings because, it's proven true. It's insane. The only thing that you have to do is adapt and go from theme to theme, sector to sector, whatever's working, and realize where you should be putting your capital, where you should be pulling it out, and just keep on rotating these ideas. Because if you do, then, as you've seen, there is no shortage of any trades anywhere. Next question is, what are the key indicators you're looking for in the tape to recognize a stuff move before it happens? You have an uncanny ability of calling those moves. Also, exhaustion gives confidence in shorts. What tape indications give you confidence in longs? So, really, it's just about watching things. And as we talk about in the room, Traders Lounge, we spend a lot of time special situations. MRIN, we're talking about it. BLIN, we're talking about it. Giving those key levels. And I'm always saying, hey guys, watch this level, record this level, and see how it reacts. And watch for this stuff move. Watch for this. Maybe it's soaking on the bid side, right? And everybody's like, what do these terms mean? You guys that are watching the videos. We go over all of this in the educational videos. So soaking, think about it like a sponge, right? Sponge, you put water in it and it just kind of takes on more than you think, right? And so think about a bid where it's only showing 100 shares or 500 shares, and all of a sudden it's just soaking and soaking and soaking and soaking. So we can assume that there's a hidden buyer there, but you have to remember that, if and when it takes on too much and the bid's gone, it's going to, explode. It's going to flush to the downside, right? So that's obviously the risk. But what I do is I focus on when they're soaking on the bid side, meaning flushes down to a particular level, but it hits a bid and it doesn't budge, right? So that is what I want to see if I'm looking to get long. I want to see folks soaking along the trend. So same thing on the upside. If it hits a wall, right? If it stuffs into a wall, I want to see that start to stay heavy after that. If things start to soak after it stuffs, that you have to take note of. You have to be aware of that. So next one was, what is the most important part to be focusing on in the first year of trading? That is going to be process over everything. Everybody always wants the P&L, always wants big trades, always wants to nail the big move, always wants the home run. If you keep on doing the same thing, find out what works for you. Find a process that works. Over time, you're going to win. And over time, you're going to find out how to really be able to put more to work on those particular trades and really get more out of it. And at some point, you will outgrow that particular strategy. You can only get so big in small caps, right? And then you start to have more risk, right? The bigger you trade on these low floats, you actually there's a point of you might outsize that position, right? Or outsize that stock. So although it could be a high probability setup, it's only a high probability setup for X amount of shares. Otherwise, you put yourself at risk because you're becoming too big of a player within the move. So that's why you see a lot of guys that go from these great big small caps to looking at these bigger picture macro type moves because they've outgrown themselves in the small cap space. Last question that came in: what criteria do you have for holding into the bell in the morning? Are you always cash? I think you said you've made a tweak recently not to hold into the bell. A lot of times I will hold into the bell if I have a great average. It's done everything that I need to see, failed follow through momentum, and it stayed heavy. But if it's a fresh name, something that's maybe the first day mover, I always want to be hands off into the open because I don't want to bias. And as you know, you're focused on this one name, and all of a sudden you've let all these other names go because you're focused on this one that's taking all your attention. So for me, I think the best way to kind of say it is that if it's the first day trade, if we come out of the open Tuesday tomorrow, and there's 3 names that haven't been runners for a while, then I probably want to be hands off the open. But if it's something that I'm prepared for, XELA is a great example. 1 day run, 2nd day breakout, next day gap, and then an ATM. I mean, I have no problem holding that into the open if I have a good position on it in a good entry, a good average. So it really depends situationally, where we're at, what's going on. But if the trade is, if the trade is what we're prepared for, then that's fine. But if it's something new and it's tracking for some crazy volume, right? If it's 20 million already, 30 million, 50 million, it's tracking for maybe 100, 200 million share a day, I want to be cautious doing anything into open. All right, so that's it for the first part of Scan. We'll get right into the my watches for the week ahead. All right, guys, so first and foremost, I am not a financial advisor. This is not buy or sell recommendations. This is for educational and informational purposes only. So if you're not okay with that, turn the video off. If you're okay with that and you understand that I'm just going over what I'm looking for on Tuesday and what I'm preparing for, and the goal of what I'm doing is to either encourage you to do the same type of work or at least have the same thought process as far as how to analyze trades and how to get better prepared for the week ahead when and if you are getting ready to trade. So the first one was Blinn. Blinn is a nice low floater, and it's traded about 350 million shares over the last 3 days. So we want to be super, super cautious of that. It did rip up 10 after hours. So there is a possibility that we might have one of those outlier type moves where maybe it goes 10, 11, 12, maybe even higher. But one thing is for sure, there's no rush for me. I'm not looking to get short pre-market. I'm not looking to, I'm going to miss it. I'm going to miss it. I got to get up at 4 a.m. I don't want to miss this trade. None of that matters for me on this particular trade. What I want to see is either A, it comes in and it traps at 7, 8 a.m. and it potentially starts to break out. 2, it starts to overextend and squeeze and maybe do a couple circuit halts. And I'm going to let either one of those things play out. And if the first one plays out, then potentially I'd get long. But for right now, I'm just going to let it do its thing. And then when everybody figures it out and figures out that they were early, gets squeezed out and does their thing, I'm going to start to get interested. Just like on staff, STAF. You guys saw that one. That was a nice opportunity. After everybody tried to find the top, tried to get in front of it, and didn't let it play out first, I went for it, and fantastic opportunity. So this one held key levels exceptionally well. Posted all the key levels in the room, and most importantly, I mean the way that it held towards the low 7s, the key level in the room was 7 to 710. So you want to assume that 7 to 710 is going to hold. And that's exactly what happened throughout the day. And the same thing over here. You can see that the 775 level, 770s or so, was the prior top. But as it broke through, it came back and retested, and it actually held that 770 level as a base. So that's a big tell that, hey, you might be on the wrong side of the trade. That resistance busted through, came back, tested it, held it as support, and now you saw how it broke out. And obviously that was after hours. Might be in for a nice pre-market gap, but we'll see. Again, no rush for me on the trade. Neo, this one's got a catalyst this week, battery day or whatever it is. I forget the date, but I'll figure it out by the morning. But fantastic trade. This one came in nice, nice gap up, parabolic. The move that I wanted was into that 55 gap. That's exactly what we got. So it was a nice way to start the day that day, especially when it retested right back into the 55, confirmed the thesis, which is what the goal is, right? We want to have the thesis confirmed in order to scale in. We don't want to be scaling in and be at max risk on the front side of a trade, because obviously that's going to be our max exposure. So keep an eye on this one for the week ahead. The lower it goes, the better, in my opinion. But last time they had one of these, there was a nice bid and it held very well throughout the day and then went nuts after hours. So typically it's done at, after 8 p.m. type session. I think it's like 1 a.m. our time or something. So it's not really a trade that you'd have, but just be aware that there could be a bid there leading into the catalyst. But keeping it as a main watch because it's been such a good trader. More of a reactive trade. I think the key levels, it's pretty easy just to put a 50-70s level right here and kind of see that that's a key level. So ideally a gap up, retest this level, fades off that. Otherwise, watch dips under this level here. See if it wants to test that VWAP level. And then if it comes back and bases over 50-10s, you might have that nice rally back red to green type move, which I'd be interested in. SPCE, fantastic on Friday. And this one was nuts after hours. And it gave a fantastic opportunity to really scale into the trade. Stayed heavy all day. Yeah, I probably took off a little bit too much too soon. But either way, twice now, longs got bailed out and then they got bagged. So at this point, there's a good chance that they're trying to raise $1 billion soon, and not a million, $1 billion. And so whether they price that at 35 or 40, that's my guess. If it closes relatively well this week, 45s, 46, 47s, maybe they do it at 40. If it's weak and it's 38, 30, 39, 40 for the next couple of days, maybe they do it at 35. We'll see. But it's been a crazy move, and obviously there's been a lot of liquidity created. So I would not be surprised though to see this fill this gap at some point, and that's under 40s and potentially down to 38. So in my eyes, super retail crowded again, and let's see what happens. Staff. This one is the first under the failed follow through. As you guys know, failed follow through is things that I'm looking for to confirm backside type action. So staff was a big retail kind of Twitter excitement type play. It got pushed on there and it gave a really big opportunity. So ideally, I'd love to see it retest towards 520s. Super unlikely. If that doesn't happen, I'd want it to at least maybe retest towards this prior level of support, which may now become resistance. So if we can't get into the 5s, ideally pushes up towards 480s, and then you risk towards 5, something like that. But I would expect to see this thing fade back right where it came from, down to the 350s. So I'd be cautiously looking for pops to potentially fade. SQBG, nice opportunity. You can see a nice little exhaustion level versus this level over here. I put on a few dabbles on Friday, but then after the exhaustion came in, I started to scale into the trade, as you guys saw, and closed it out before the close. I did not expect $8 to $9 straight fade, but it worked out. It was a nice opportunity. Expensive borrow, so I didn't go with any crazy size, but when you get $8, $9 per share, you don't really need that much to make a good trade. So anyway, what I'd be looking for is maybe a pop towards 1550s, any exhaustion through there. Maybe it goes into a circuit halt and starts to fail. I'd be looking for that trade to fade. TAT, higher the better. This is another one, this 860s or so is a prior level of resistance. Ideally pushes, fails, and potentially unwinds under that 8 level. And we'll see what happens with that one. It's been a nice little runner. SWBI had a nice opportunity on Thursday. I did not go for it on Friday. So nice parabolic move. I started into it a little bit and then shorted the backside of the move. Fantastic unwind. Forgot about it the next day. My bad. But you can see it retested right into this prior level of support and now became the resistance point, right? So it came in, it faded to this level, and it held pretty well. The next day it opened weak, retested that, failed, and just came apart. So nice one to be prepared for. I was focused on SPCE and other ones, but again, it's all about preparation. If you're coming prepared for this market, you're getting these trades, and you're getting really nice opportunities. So that's why these scans, Sunday scan, in this case Monday night scan, and all these other different types of prep that we do is important, because when and if the trade comes, you're prepared and you're confident, which is, you know, what you need in this market. All right, so the next part of scan is continuation. These are more of the long bias type trades, ones that I'm looking for potential breakouts, continuation of the trend. So MOXC, you know, as you guys know, I've been here for a while, so it's not a fresh idea. I've been here since the teens, and we had that first move towards 25, and so I had a swing trade as well as a day trade that I had scaled into the trade. I sold all that day trade. I've been trading around the core of the swing trade. It started to hold a couple days last week at 18, and I said, you know, this is holding oddly well. Maybe we'll have that nice breakout towards the end of the week. And sure enough, we did. I think your key level is going to be 25. And this one has yet to go away. So we might have one of those breakouts where it goes 30, 40 and does something crazy. That's what I'm trying to be patient with. That's what I'm trying to let happen. But again, you have to assume that, you know, it probably doesn't. It's an outlier move that I'm looking for. I'm letting a good trade work. I'm letting a good average work. But, you know, you have to be of the mindset that, hey, you know, there's a good chance that it also fails. But, you know, so far I'm letting it work, trend, and continue to prove itself as it has each and every single day. I like the fact that every day it breaks out, it fails, and then it comes back the next day. To me, that's kind of training shorts to come in each and every single day, and then at some point they won't let them out just like the first time. So we'll see. And again, I'm speaking from a much lower average, as anybody that's been following scans should know. AUUD has been a nice one too. This one was a swing trade last week from this setup over here, from this big volume day. Sold it too soon, relonged it, got a good piece of it, got the gap the next day, and then it should have died. It should have died. It keeps on hanging around. There's something in the tape. There's some big players in there, you know, playing around with it. And it almost feels like maybe they caught some shorts. So I'd love to see this thing start to, you know, really go nuts. And whether it goes 9, 10, 15, or whether it fails, again, should assume it fails. It's had a huge run. However, it's checked all the boxes for potential. And that's all I care about. If it's got the potential and it starts to go, that's when you get the outlier moves. ALEC, great short, great opportunity on Friday. I'm going to be looking for dips. Ideally, we start to have some type of consolidation. Hopefully, week open, comes back, you know, maybe retest towards this prior support in the 34s, low 34s, starts to bid up, and then potential breakout over that VWAP level. We'll see. MRIN, I actually have it on the continuation. You know, I'm not bullish, but, you know, look, if this starts to base 2150s, we could have that 25, 30 type breakout move. We'll see. You know, again, I think everybody's looking to short this thing. When everybody's looking to do the same thing, it lasts a lot longer than you think. Keep in mind, when it dips, every short is looking to get out. So if it doesn't dip enough, then they're not getting out. If it dips enough to convince them that it's going to break down, they're adding. And if it holds, they're just making their situation worse and worse and worse. So keep that in mind. I would not be surprised to see this do something crazy. You know, I'm gonna assume that it doesn't, because we're up from, you know, under 3, but it does have the ability, if it wants to. It traded almost 1 billion shares last week. CLSD, watch dips, trend, and dips first 5 was the sort of the thought process. Potential breakout over 6, maybe a short-term swing. I love the fact that it had all this volume here on the daily. Holding it well. I positioned on Friday. I'm looking to continue to position if the trade is correct. A couple other ones. Jack, great daily chart. Looking to position on dips. NSYS, no position at the moment. Super small float, super small outstanding shares. The volume in the last couple days has me interested. I'm going to be watching dips. If it starts to trend, it would be more of like a quiet kind of grind. Join the trend type trade. Crex, we've seen this one before. It's been holding well. In my eyes, the trade played out when it went nuts this day, so I had taken the trade off. I never repositioned, but they're soaking it again, you can see, so I am interested in the trade again versus maybe the 220 level. And then last but not least, FWP. You guys saw that last week. This is the catalyst into September 6th. So no rush. I'm hoping that it pulls back, ideally, and then reposition a little bit more. But once again, thank you guys for watching. Leave your key takeaway. Put the timestamp. Whatever it was, the key takeaway. It will help other people, and it helps us make those videos, the short videos that you guys see each and every single day that we put out there. That's just from you guys. So we appreciate you guys doing that. Leave a like. If you have any questions whatsoever about coming on board, reach out, cam@investorsunderground.com. And I think that's about it. I hope you guys enjoyed your long weekend, and we'll catch you guys soon.